So first of all, when I want to take a trade, I look at the market structure, because it is from the market structure that you know exactly where the market should be going and where it is coming from. Okay, so this is AUD. This is 1 hour time frame. So let's look at the market structure. What is market doing? So I'm starting from this very point. So this is a high, this is a low, this is a lower high, lower low. Market gave us one that looks like a lower high. Are you seeing it now? But we now discovered that it is an inducement, it is an internal range liquidity. So let's say before the further market printed, you saw this as a lower low, but market came here, created this. Are you seeing it now? And this. So at this point, let me redraw the market structure for you. Let's redraw it again. Okay, so this is what we have: overall market structure, 1 hour time frame. This is high, this is the low, this is the lower high, this is the lower low. Why is this a lower low? Why is this a lower low? It has broken the previous low, so it is a lower low. Are you seeing it now? This is a lower high because it is lower than this side that was here. Are you seeing it now? And it is valid to be called a lower high because it is one that produced the last low that broke structure. So this is a lower high, should produce a lower low. A valid lower high should produce a lower low. Are you seeing it now? So this is lower low. This is supposed to be lower high, but it did not produce a lower low. It is not the last high that pushed price to break this structure. So we go to this. There's another high again here. Are you seeing it now? So this now is an internal, excuse me. So this now is an internal range liquidity. Are you seeing it now? Why is it internal? Because it's in between this lower high and this lower low. So this is internal high. Are you seeing it now? It gave another internal high. So this is a lower high. So instead of using this for a lower high, we saw that it produced another lower high. So if this is the former lower high, this is the new lower high. So what did market do here? Lower low. It produced internal range liquidity. Are you seeing it now? It came back to sweep it. Why does price produce internal range liquidity? Why does it produce it? It does that when it doesn't have enough money to break a low. So when price came here, are you seeing it now? It came back here as to give a lower high. Its intention normally is to come and break this low to produce a lower low, continue its downtrend, its newly found downtrend. Are you seeing it now? But when price got here, it discovered that the money it has is not enough to push price to this place. This is where the money stopped. And it knows that when market moves like this, when the market moves like this, it has created an internal range liquidity. What does that mean? A lot of people placed their sell orders. People that trade 15 minutes time frame and so on that. Some people placed their sell orders here around this area to shut it down. So the purpose of creating this internal range liquidity, so that when market has moved a little, to come back, take them out, trigger their stop losses. Remember that liquidity is money, and money is the fuel of the market. Are you seeing it now? So when market dropped down here, produced, are you seeing it now? Some people took that sell. Are you seeing it now? Not knowing that it is a trap. The market went back, swept this high, used an institutional reference point around here. Are you seeing it now? It swept this high, even swept this small one internally here. Are you seeing that? Are you seeing it now? So it came here and created the lower high, and then it had enough money to break just this low. Are you seeing it now? Now this high too has not been able to produce a new low. This one is an internal low, it broke it. So in this trend, are you seeing it now? This is a new low. But the overall low that we have not been still able to break, we have still not been able to break is this one. So this is it. Market produced, did as if okay, it wants to continue, did as if it's producing a lower high to come down, but it could not afford to come down to break this again. So what did it have to do? It went back up, tried to sweep. Are you seeing it now? This internally generated, what do they call it now? Liquidity, this high. It wants to use it. It came in here. Are you seeing it now? Try to come down again, but money no do. Are you seeing it now? It went back again, tapped into this fair value gap here. Are you seeing it? Tapped into this fair value gap, this supply area, and tried to come down, but still it couldn't break this low. So why am I taking this trade? I'm taking this trade with the mindset that price will come, this new high, that this place I am now. I'm taking the mindset that price is going to come here, sweep this high, tap into this other block. That is my mindset for it. Tap into this other block and finally drop down because it has gathered enough liquidity. So this is my simple outlook for it. You can see the schematics, very simple. Now I could be wrong on this, but this is how you create a storyline. Are you seeing that? You create a storyline around your trades. You don't just take trades impulsively. Are you seeing it now? And those storylines should be backed up following market structure. Are you seeing it now? A structure usually is framework. Are you seeing it now? It's the framework how the market moves. It moves using liquidity because liquidity is the fuel. So, and then if it's buying, you're following the trend. It is selling, you're following the trend. It will not always be straightforward because liquidity has to be generated internally. Are you seeing it now? So this is my simple market structure on it. I believe you would have picked one or two from it. Are you seeing it now? You would have picked one or two from the trade. So now I did not, let me just point this out. I did not wait, I didn't have to wait for market to come here because this one now is a protected high. Market already swept it. This high was created when market swept this liquidity. And then the high that created this, market has closed below it. I hope I'm not sounding complex. So I'm not expecting price to come here. So that's the area I'm comfortable to put my stop loss at. So this is what I'm expecting. So let's see how it plays out. Alright, please, if you have not liked, like, subscribe and turn on your notification. You have a lot to learn on this. And then if you have any questions or clarifications, please put it down there and I'll make another video to explain it for you. Alright, thank you.